Question 1. Which of the following best explains the concept of insurable interest in the context of property and casualty insurance in Vermont? A. It refers to the insurer's obligation to provide a payout after any claim is made. B. It represents the insured's financial interest in the subject of insurance at the time of loss. C. It is the insurer's right to recover damages from a responsible third party. D. It describes the insured's ability to select the amount of coverage for any property. Correct answer. B. It represents the insured's financial interest in the subject of insurance at the time of loss. Explanation. In Vermont and under general insurance principles, insurable interest ensures that the insured has a legitimate financial stake in the property or casualty being insured. This requirement prevents insurance from being used as a form of wagering. For property insurance claims in Vermont, the insured must demonstrate that they would suffer financial harm if the loss occurs, as per the state's adoption of standard insurance practices. Question 2. Mr. Smith, a Vermont resident, owns a commercial property insured under a building and personal property coverage form. A severe storm damages the roof and inventory. Which coverage section would address the loss to the inventory? A. Coverage building. B. Business income and extra expense coverage. C. Coverage B. Business personal property. D. Coverage C. Property of others. Correct answer. C. Coverage B. Business personal property. Explanation. Under the building and personal property coverage form, Coverage B addresses losses to business personal property, including inventory owned by the insured. This is distinct from the building structure itself, Coverage A, or property belonging to others, Coverage C. Vermont follows standard commercial property insurance practices in defining these coverage categories. Question 3. Which of the following is considered an unfair trade practice under Vermont insurance law? A. Offering rebates to induce a policyholder to cancel and switch policies. B. Clearly explaining policy exclusions to a potential buyer. C. Providing lower premiums for bundled insurance coverage. D. Denying coverage for a peril excluded in the policy. Correct answer. A. Offering rebates to induce a policyholder to cancel and switch policies. Explanation. Under Vermont law and the Unfair Trade Practices Act, rebating. Offering cash or other inducements to purchase or cancel a policy is prohibited. This regulation helps maintain fair competition and protects consumers from being misled. Question 4. A homeowner in Vermont has a standard HA3 policy. During a snowstorm, the weight of accumulated snow causes a roof to collapse. Which policy provision covers the damage? The loss of use coverage. B. Coverage dwelling. C. Coverage B. Other structures. D. Personal property coverage. Correct answer. B. Coverage dwelling. Explanation. In Vermont, a HA3 policy typically includes coverage for structural damage to the insured dwelling under Coverage A. Roof collapse due to the weight of snow is a covered peril under this form. Vermont's climate necessitates understanding these provisions for homeowners. Question 5. Which of the following is a duty of the Vermont Commissioner of Insurance? A. Approving or disapproving insurance policy forms used in Vermont. B. Drafting and enacting new insurance laws directly. C. Acting as an intermediary in private claims disputes. D. Guaranteeing the financial solvency of all insurers. Correct answer. A. Approving or disapproving insurance policy forms used in Vermont. Explanation. The Vermont Commissioner of Insurance is responsible for ensuring compliance with state laws, including approving policy forms to protect consumers. However, the Commissioner does not legislate laws or resolve private claims disputes directly. Financial solvency oversight is regulatory but not a guarantee. Question 6. In Vermont, under a personal auto policy, PAP, which coverage would pay for damages to your vehicle caused by hitting a deer? A. Liability coverage. B. Collision coverage. C. Comprehensive coverage. D. Medical payments coverage. Correct answer. C. Comprehensive coverage. Explanation. Comprehensive coverage under a personal auto policy pays for damages caused by non-collision related events such as theft, fire, vandalism, or hitting an animal, e.g. a deer. Vermont, with its abundant wildlife, frequently sees claims involving this type of coverage. Question 7. Under Vermont's insurance laws, what constitutes twisting as an unfair trade practice? A. Requiring unnecessary documentation during a claims process. B. Misrepresenting a policy to persuade a policyholder to switch insurers. C. Offering unauthorized discounts to entice customers. D. Failing to provide prompt claims payments. Correct answer. B. Misrepresenting a policy to persuade a policyholder to switch insurers. Explanation. Twisting involves the misrepresentation of an insurance policy's terms to convince a policyholder to replace an existing policy with another, often less favorable one. Vermont law, like many other states, strictly prohibits this practice under its Unfair Trade Practices Act, safeguarding consumers against deceptive sales tactics. Question 8. Mrs. Taylor, a Vermont homeowner, files a claim under her HA5 policy after her basement floods due to heavy rain. The claim is denied. Why is this denial most likely justified? A. The policy excludes losses caused by flooding unless caused by plumbing issues. B. The policy does not cover water damage under any circumstances. C. Homeowners' policies do not provide coverage for basements. D. Vermont law prohibits coverage for natural disaster claims in standard policies. Correct answer. A. The policy excludes losses caused by flooding unless caused by plumbing issues. Explanation. Flooding from natural disasters is excluded under standard homeowners' policies like the HA5 form. Flood coverage must be purchased separately through the National Flood Insurance Program, NFIP, or an endorsement. Vermont residents, especially in flood-prone areas, should be aware of these exclusions. Question 9. What is the primary purpose of the actual cash value method of loss valuation in Vermont property insurance? A. To compensate policyholders for the full cost of replacing damaged property. B. To determine the current market value of the property without depreciation. C. To reimburse the policyholder for the replacement cost minus depreciation. D. To settle claims based on the property's original purchase price. Correct answer. C. To reimburse the policyholder for the replacement cost minus depreciation. Explanation. Actual cash value, ACV, reimburses policyholders for the replacement cost of damaged property, adjusted for depreciation. This method ensures that insurance does not overcompensate for older, used items. Vermont property insurance policies typically use ACV unless a replacement cost endorsement is added. Question 10. Which of the following actions by an insurance adjuster in Vermont would violate ethical standards? A. Promptly contacting claimants and investigating claims thoroughly. B. Offering a settlement significantly lower than the claim's reasonable value. C. Advising claimants to consult with legal counsel if necessary. D. Keeping claimants informed of their claim status throughout the process. Correct answer. B. Offering a settlement significantly lower than the claim's reasonable value. Explanation. Lowballing a settlement violates Vermont's ethical standards and fair claims practices. Adjusters must provide fair compensation based on the policy's terms and the actual loss incurred. The Vermont Department of Financial Regulation enforces these standards to ensure fair treatment of claimants. Question 11. In a standard homeowners insurance policy, which of the following perils is typically not covered under the basic policy form? A. Fire. B. Theft. C. Earthquake. D. Vandalism. Correct answer. C. Earthquake. Explanation. Earthquake coverage is generally excluded from standard homeowners insurance policies and often requires a separate endorsement or policy. Basic policy forms typically cover fire, theft, and vandalism. Earthquakes are considered high-risk events that require specialized coverage due to the potential for catastrophic loss. Question 12. Which of the following is an example of an indirect loss that may be covered under a property insurance policy? A. Fire damage to the insured's home. B. Loss of rental income due to a covered event. C. Theft of jewelry from the insured's home. D. Hail damage to the insured's car. Correct answer. B. Loss of rental income due to a covered event. Explanation. An indirect loss refers to the financial impact that results from an inability to use the insured property, such as lost rental income while the property is being repaired after. A covered loss, direct losses, answers A, C, and D involve physical damage or a loss to property. Question 13. In an insurance contract, which term refers to the insurer's right to assume the legal rights of the insured to recover losses from a third party? A, indemnity. B, subrogation. C, assignment. D, waiver. Correct answer. B, subrogation. Explanation. Subrogation allows the insured to step into the shoes of the insured to pursue recovery from a third party responsible for the loss. This right helps insurers recoup some costs, reducing premiums. Indemnity, answer A, is the principle of making the insured whole. Assignment, answer C, transfers policy ownership, and waiver, answer D, is the voluntary relinquishment of unknown right. Question 14. Which of the following statements best describes the concept of replacement cost coverage in property insurance? A. It reimburses the insured based on the depreciated value of the property. B. It pays the insured the cost to replace the damaged property with similar items. C. It provides an agreed upon amount regardless of actual repair costs. D. It covers the original purchase price of the damaged property. Correct answer. B. It pays the insured the cost to replace the damaged property with similar items. Explanation. Replacement cost coverage reimburses the insured for the cost of replacing damaged property with new items of like kind and quality without considering depreciation. Actual cash value, answer A, would account for depreciation, and the other options, answer C and D, do not accurately describe replacement cost. Question 15. Which type of insurance policy would provide coverage if a customer slips and falls in a business's retail store? A. Product liability insurance. B. Commercial auto insurance. C. General liability insurance. D. Workers' compensation insurance. Correct answer. C. General liability insurance. Explanation. General liability insurance covers bodily injury and property damage claims arising from accidents on the insured's premises. A slip and fall incident in a retail store would be covered by this policy. Product liability, answer A, covers injuries due to products. Commercial auto, answer B, covers vehicles. And workers' compensation, answer D, covers employees. Question 16. In an insurance policy, which section specifies the duties of the insured and insurer in the event of a loss? A. Exclusions. B. Insuring agreement. C. Conditions. D. Declarations. Correct answer. C. Conditions. Explanation. The conditions section outlines the responsibilities of both the insured and insurer following a loss. It may include requirements for reporting claims, cooperating with investigations, and protecting damaged property. The exclusions section, answer A, lists perils not covered. The insuring agreement, answer B, defines coverage. And the declarations page, answer D, includes policy details like names and coverages. Question 17. An insured's auto policy has split limits of $50,000, $100,000, $25,000. What does the $100,000 represent? A. Maximum coverage for property damage per accident. B. Maximum bodily injury coverage per person. C. Maximum bodily injury coverage per accident. D. Maximum deductible for bodily injury. Correct answer. C. Maximum bodily injury coverage per accident. Explanation. In split limits, the second figure, $100,000, represents the maximum amount payable for bodily injury per accident, regardless of the number of people injured. The first figure, $50,000, is the limit per person for bodily injury, and the third, $25,000, is the property damage limit. Question 18. Which of the following best describes a binder in insurance? A. A temporary contract of insurance providing coverage until the policy is issued. B. The primary source of coverage for high-value property. C. A guarantee that the insurer will issue a policy regardless of risk. D. An endorsement that increases policy limits. Correct answer. A temporary contract of insurance providing coverage until the policy is issued. Explanation. A binder is a temporary agreement that provides immediate insurance coverage until the formal policy can be issued. It acts as a short-term proof of insurance, covering the insured against potential losses. Answers B, C, and D do not accurately describe the purpose or function of a binder. Question 19. In property insurance, which of the following terms refers to the concept that insurance should restore the insured to the same financial position as before the loss? A. Waiver. B. Indemnity. C. Reimbursement. D. Subrogation. Correct answer. B. Indemnity. Explanation. The principle of indemnity ensures that insurance reimburses the insured only to the extent of their financial loss, preventing profit from a claim. This principle is foundational in property and casualty insurance to maintain fairness. Reimbursement, answer C, involves specific payments. Waiver, answer A, is the relinquishment of rights. And subrogation, answer D, allows the insurer to seek recovery from responsible third parties. Question 20. If an insured's home sustains damage from a covered peril, which of the following clauses might require the insured to repair or replace the property before receiving full reimbursement? A. Pro rata clause. B. Coinsurance clause. C. Deductible clause. D. Restoration clause. Correct answer. B. Coinsurance clause. Explanation. The coinsurance clause in a property policy often requires the insured to carry a certain percentage of the property's value as coverage. If this condition is not met, the insured may only receive a partial payout. To receive full reimbursement, the insured must generally comply with the coinsurance requirements, which may involve repairing or replacing damaged property. The other clauses listed do not relate to repair or replacement requirements in this way. Question 21. What type of insurance policy covers a business for bodily injury and property damage claims that occur on its premises or as a result of its operations? A. Commercial property insurance. B. Business income insurance. C. Commercial general liability insurance. D. Professional liability insurance. Correct answer. C. Commercial general liability insurance. Explanation. Commercial general liability (CGL) insurance provides coverage for bodily injury and property damage claims arising from a business's premises, operations, or products. Commercial property insurance A. Covers the physical assets of the business. Business income insurance B. Covers lost income due to covered loss. Professional liability insurance D. Protects against errors and omissions in providing professional services. Question 22. Which of the following is an example of pure risk in the context of property insurance? A. The potential to win. A lottery. B. The risk of an investment losing value. C. The possibility of a house fire. D. The chance of a stock price increase. Correct answer. C. The possibility of a house fire. Explanation. Pure risk involves situations that only have the possibility of loss or no change. There is no potential for gain. A house fire, C, is a classic example of pure risk. Options A and D are speculative risks, which involve the possibility of gain or loss. Option B relates to financial risk in investments. Question 23. In which of the following scenarios would an unendorsed commercial property policy provide coverage? A. Flood damage. B. Fire damage. C. Earthquake damage. D. Sewer backup damage. Correct answer. B. Fire damage. Explanation. A standard commercial property policy typically covers perils such as fire, lightning, and some other named perils, but excludes coverage for floods, the earthquakes, C, and sewer backups, D, unless endorsements are added. Question 24. What is the primary function of an umbrella liability policy? A. To cover specific property losses not covered by a standard policy. B. To provide coverage only for the policyholder's business vehicles. C. To extend additional liability coverage beyond the limits of underlying policies. D. To replace a homeowner's policy for high-value properties. Correct answer. C. To extend additional liability coverage beyond the limits of underlying policies. Explanation. An umbrella liability policy provides extra coverage above the limits of the insured's primary policies, e.g., homeowners or auto insurance. It can also cover certain claims excluded from underlying policies, offering broader protection. Question 25. What is the term for a policy that protects a company when a third party sues due to harm caused by defective products? A. Completed operations coverage. B. Product liability insurance. C. Premises liability coverage. D. Inland marine insurance. Correct answer. B. Product liability insurance. Explanation. Product liability insurance covers businesses against claims related to injuries or damages caused by products they manufactured, sold, or distributed. Completed operations, A, is for post-project liabilities. Premises liability, C, covers accidents on business property. And inland marine, D, covers property in transit. Question 26. Which of the following would be covered under a personal auto policy, PAP, comprehensive coverage? A. Collision with another vehicle. B. Theft of the insured vehicle. C. Injuries to the policyholder in an accident. D. Damage to another person's vehicle. Correct answer. B. Theft of the insured vehicle. Explanation. Comprehensive coverage under a personal auto policy covers non-collision related incidents such as theft, vandalism, or natural disasters. Collision, A, covers accidents with vehicles or objects, while options, C and D, refer to other coverage types within auto insurance. Question 27. What does a declarations page in an insurance policy typically contain? A. Detailed exclusions and conditions of the policy. B. Information on how to file a claim. C. Basic policy details such as the insured's name, coverage limits, and premium. D. Descriptions of covered perils. Correct answer. C. Basic policy details such as the insured's name, coverage limits, and premium. Explanation. The declarations page outlines the essential information of the policy, including the insured's name, policy period, coverage types and limits, and premium amount. Options A, B, and D describe other sections of an insurance policy. Question 28. Which of the following endorsements would provide coverage for valuable items such as jewelry or fine art under a homeowner's insurance policy? A. Inflation guard endorsement. B. Scheduled personal property endorsement. C. Replacement cost endorsement. D. Earthquake endorsement. Correct answer. B. Scheduled personal property endorsement. Explanation. A scheduled personal property endorsement provides coverage for high-value items that may exceed the standard coverage limits under a homeowner's policy. Options A, C, and D relate to other types of coverage enhancements. Question 29. What type of law is primarily associated with compensation for damages when a policyholder's actions inadvertently result in harm to others? A. Contract law. B. Tort law. C. Constitutional law. D. Administrative law. Correct answer. B. Tort law. Explanation. Tort law involves claims for compensation when someone's negligence or wrongful actions cause harm to another person or property. Insurance policies often cover liabilities arising from torts, such as personal injury or property damage. Question 30. In a property insurance policy, what does the term coinsurance refer to? A. The splitting of premium payments between the insurer and insured. B. The insured's agreement to cover a percentage of covered losses. C. A joint policy between two insurers for shared coverage. D. A mandatory deductible on all property damage claims. Correct answer. B. The insured's agreement to cover a percentage of covered losses. L. Explanation. Coinsurance is a provision where the insured agrees to maintain coverage at a specified percentage of the property's value, typically 80%, 90%, or 100%. Failure to do so results in reduced claims payment by the insurer in the event of partial loss. Question 41. In Ohio, which of the following is considered an unfair claims practice by an insurance company? A. Paying a claim within 30 days of receipt. B. Failing to promptly investigate a claim. C. Conducting thorough background checks on claimants. D. Offering settlement options to the claimant. Correct answer. B. Failing to promptly investigate a claim. Explanation. Ohio law considers it an unfair claims practice if an insurer does not promptly investigate a claim. According to the Ohio Administrative Code OC 3901154, insurers are required to act with efficiency and in good faith when handling claims. Delays in investigation and settlement, if unreasonable, are seen as a violation of fair claims practices, which protects the insured's right to timely claim resolution. Question 42. Under Ohio insurance law, an insurance agent's license may be suspended or revoked for which of the following actions? A. Refusing to renew their license. B. Failing to complete a client's application. C. Misrepresenting policy terms to client. D. Declining to represent a specific insurance company. Correct answer. C. Misrepresenting policy terms to client. Explanation. Ohio Revised Code, ORC 3905.14 allows the state to suspend, revoke, or refuse to renew an insurance agent's license if the agent is found to have misrepresented the terms of a policy. Misrepresentation is a violation of ethical standards and may mislead clients about the nature or extent of coverage. Question 43. Which of the following is required in Ohio for an insurer to legally deny a claim? A. Evidence that the insured committed fraud. B. An initial payment offered to the insured. C. Proof that the insured had prior losses. D. A report from the insurance commissioner. Correct answer. A. Evidence that the insured committed fraud. Explanation. In Ohio, insurers can deny a claim if there is clear evidence of fraud. According to ORC 2913.47, insurance fraud includes any act in which a person knowingly presents false information to an insurer with the intent to deceive or mislead. If fraud is detected, insurers can lawfully deny the claim to protect against improper payments. Question 44. In Ohio, how long does an insured have to file a claim under a standard homeowner's insurance policy? A. 30 days after the loss. B. 90 days after the loss. C. 1 year after the loss. D. 2 years after the loss. Correct answer. C. 1 year after the loss. Explanation. Standard homeowners insurance policies in Ohio typically have a statute of limitations of 1 year for filing claims. The suit against us provision within most homeowners policies sets this 1 year limit, which is also consistent with Ohio's insurance contract statutes. Question 45. Which of the following types of losses is covered by Ohio's mine subsidence insurance? A. Damage due to an earthquake. B. Damage caused by flooding. C. Structural damage from ground shifting due to coal mining. D. Damage from falling objects. Correct answer. C. Structural damage from ground shifting due to coal mining. Explanation. Mine subsidence insurance in Ohio provides coverage for property damage due to subsidence, which is ground movement caused by past coal mining activities. This coverage is managed under the Ohio Mine Subsidence Insurance Fund and is designed to protect homes in regions where mining activities increase the risk of ground instability. Question 46. In Ohio, the State Guarantee Association provides protection to policyholders in the event of an insurance company insolvency. Which type of policy is generally not covered by this guarantee? A. Life insurance policies. B. Property insurance policies. C. Annuity contracts. D. Surplus lines insurance. Correct answer. D. Surplus lines insurance. Explanation. The Ohio Insurance Guarantee Association, OIGA, does not cover surplus lines insurance, as these policies are written by non-admitted insurers. Surplus lines insurers operate outside the Ohio Guarantee Fund's protection, meaning policyholders should be aware of the additional risk of insolvency without state-backed financial security. Question 47. What is the minimum liability coverage required by Ohio law for bodily injury per accident in an auto insurance policy? A. $12,500 per accident. B. $25,000 per accident. C. $50,000 per accident. D. $100,000 per accident. Correct answer. B. $25,000 per accident. Explanation. Ohio's minimum financial responsibility law requires a minimum of $25,000 in liability coverage for bodily injury or death per accident. This minimum helps ensure that Ohio drivers have basic protection for third parties in the event of an at-fault accident. Question 48. In Ohio, If an insurance policy is canceled due to non-payment, what is the minimum advance notice an insurer must provide to the policyholder? A. 5 days. B. 10 days. C. 15 days. D. 30 days. Correct answer. B. 10 days. Explanation. Ohio insurance law mandates that insurers provide a minimum of 10 days notice before canceling a policy for non-payment of premium. This regulation, found in ORC 3937.25, allows policyholders a reasonable time to rectify payment issues to avoid coverage lapses. Question 49. According to Ohio law, a personal auto policy's uninsured motorist coverage applies in which of the following situations? A. The insured vehicle is damaged by a hit-and-run driver. B. The insured causes an accident with another driver. C. The insured is involved in an accident outside Ohio. D. The insured's vehicle is vandalized. Correct answer. A. The insured vehicle is damaged by a hit-and-run driver. Explanation. Ohio's uninsured motorist coverage protects insureds when involved in accidents with drivers who are uninsured or unidentified, such as in a hit-and-run. The coverage addresses bodily injuries caused by hit-and-run incidents, which are treated similarly to incidents with uninsured motorists under Ohio insurance laws. Question 50. In Ohio, if a property insurance claim is denied by the insurer, how can the insured dispute this denial? A. By requesting a policy cancellation. B. By filing a complaint with the Ohio Department of Insurance. C. By purchasing additional coverage. D. By paying an additional premium to reopen the claim. Correct answer. B. By filing a complaint with the Ohio Department of Insurance. Explanation. If a claim is denied, Ohio policyholders can file a complaint with the Ohio Department of Insurance, OD, to investigate potential unfair treatment. The ODI evaluates whether the insurer's denial violates Ohio's unfair claims practices, regulations, or other state insurance laws. Question 51. Under Vermont's insurance regulations, which of the following best describes an admitted insurer? A. An insurer licensed and authorized to transact insurance business in Vermont. B. An insurer operating under surplus lines provisions in Vermont. C. An insurer offering coverage without requiring state approval for policy terms. D. An insurer that does not participate in Vermont's State Guarantee Fund. Correct answer. A. An insurer licensed and authorized to transact insurance business in Vermont. Explanation. An admitted insurer is licensed by the Vermont Department of Financial Regulation and adheres to state regulations, including policy form approval and participation in the State Guarantee Fund. These insurers provide additional consumer protection compared to non-admitted or surplus lines insurers. Question 52. Which type of policy is most appropriate for covering of Vermont contractors' tools and equipment during transit to job sites? A. Commercial general liability policy. B. Inland marine policy. C. Commercial property insurance. D. Business owner's policy, BOP. Correct answer. B. Inland marine policy. Explanation. An inland marine policy provides coverage for movable properties such as tools and equipment during transit or at temporary locations. This is crucial for Vermont contractors who often transport equipment to different sites. Question 53. Mr. Bradley owns a seasonal vacation home in Vermont. Which policy form is most suitable for providing comprehensive coverage for this type of property? A. HA2 broad form. B. HA3 special form. C. HA4 tenants form. D. HA8 modified coverage form. Correct answer. B. HA3 special form. Explanation. A HA3 special form provides all-risk coverage for the dwelling and named peril coverage for personal property. This is ideal for Vermont's seasonal vacation homes, which may face diverse risks like harsh weather conditions or theft. Question 54. Which of the following best describes Vermont's mandatory financial responsibility requirements for auto insurance? A. Minimum liability coverage of $25,000 per person, $50,000 per accident, and $10,000 for property damage. B. Full coverage including collision and comprehensive for all vehicles. C. Liability limits that exceed $100,000 for bodily injury and $50,000 for property damage. D. Uninsured motorist coverage is optional in Vermont. Correct answer. A minimum liability coverage of $25,000 per person, $50,000 per accident, and $10,000 for property damage. Explanation. Vermont law mandates auto insurance liability coverage with minimum limits of $25,000, $50,000, and $1,000 to protect drivers from the financial consequences of accidents. Question 55. Which type of liability applies when a Vermont business is held responsible for injuries caused by defective products it sold? A. Strict liability. B. Vicarious liability. C. Negligence liability. D. Contractual liability. Correct answer. A. Strict liability. Explanation. Strict liability applies to cases involving defective products where the business can be held responsible regardless of negligence. Vermont businesses must ensure product safety to mitigate such risks. Question 56. In Vermont, what is the primary function of the declarations page of an insurance policy? A. To define exclusions and limitations of the policy. B. To summarize the policyholder's coverage details. C. To outline the legal rights of the insurer. D. To list the claims process step by step. Correct answer. B. To summarize the policyholder's coverage details. Explanation. The declarations page provides an overview of the insured's coverage, including policyholder information, coverage amounts, premium details, and covered risks. In Vermont, as elsewhere, this page is critical for policy review. Question 57. If a Vermont insurance producer misrepresents the terms of a policy to induce a sale, which unfair trade practice is being committed? A. Rebidding. B. Twisting. C. Misrepresentation. D. Unfair claims settlement. Correct answer. C. Misrepresentation. Explanation. Misrepresentation occurs when an insurance producer provides false or misleading information about a policy's terms or benefits. Vermont's Unfair Trade Practices Act prohibits this deceptive practice to protect consumers. Question 58. Under Vermont insurance laws, which coverage is most appropriate to protect a business against loss of income after a fire damages its premises? A. Building and personal property coverage. B. Extra expense coverage. C. Business income coverage. D. Commercial general liability. Correct answer. C. Business income coverage. Explanation. Business income coverage reimburses lost income when a business cannot operate due to covered loss such as a fire. Vermont businesses rely on this coverage to sustain operations during downtime. Question 59. In Vermont, what is the role of the Commissioner of Insurance regarding financial solvency of insurers? A. Monitoring claim settlement ratios. B. Licensing insurance producers. C. Conducting financial examinations of insurers. D. Approving individual claims payments. Correct answer. C. Conducting financial examinations of insurers. Explanation. The Vermont Commissioner of Insurance ensures the financial solvency of insurers by conducting regular financial examinations and reviewing annual statements. This oversight protects policyholders from insurer insolvency. Question 60. Which of the following is a key characteristic of a fidelity bond in Vermont? A. It guarantees the performance of a contractor's obligations. B. It protects an employer against employee dishonesty. C. It provides liability coverage for errors and omissions. D. It covers loss of business property due to theft. Correct answer. B. It protects an employer against employee dishonesty. Explanation. A fidelity bond protects Vermont employers from losses caused by dishonest acts of employees, such as theft or fraud. This is distinct from surety bonds, which guarantee contractual performance. Question 61. In Vermont, which of the following is required to maintain a valid insurance producer license? A. Submit proof of financial solvency annually. B. Complete 24 hours of continuing education every 2 years. C. Attend mandatory quarterly meetings of the Department of Financial Regulation. D. Offer rebates to clients as allowed by state law. Correct answer. B. Complete 24 hours of continuing education every 2 years. Explanation. Vermont requires licensed insurance producers to complete 24 hours of continuing education, every 2 years, with at least 3 hours dedicated to ethics. This ensures that producers stay updated on industry regulations and practices. Question 62. What is the primary purpose of Vermont's uninsured motorist coverage requirement? A. To provide full coverage for vehicle damages in all accidents. B. To protect insured drivers if involved in an accident with an uninsured motorist. C. To reduce insurance premiums for high-risk drivers. D. To ensure legal defense costs are always covered. Correct answer. B. To protect insured drivers if involved in an accident with an uninsured motorist. Explanation. Vermont mandates uninsured motorist coverage to provide compensation for injuries or damages caused by a driver who lacks liability insurance. This protects policyholders against financial loss in such scenarios. Question 63. Which type of Vermont insurance policy is most suitable for covering a commercial property and its contents against fire and theft? A. Inland marine insurance. B. Business owner's policy, BOP. C. Commercial general liability, CGL, policy. D. Workers' compensation insurance. Correct answer. B. Business owner's policy, BOP. Explanation. A BOP combines property and liability coverage, making it ideal for small to medium-sized businesses in Vermont. It covers the building, contents, and liabilities such as theft and fire-related damages. Question 64. In Vermont, how long does an insurer have to notify a policyholder of non-renewal of a personal auto insurance policy? A. 10 days before expiration. B. 30 days before expiration. C. 60 days before expiration. D. 90 days before expiration. Correct answer. B. 30 days before expiration. Explanation. Vermont law requires insurers to notify policyholders at least 30 days before the expiration date if they intend to non-renew a personal auto insurance policy. This allows the policyholder adequate time to secure alternate coverage. Question 65. Which of the following is considered an unfair claims settlement practice in Vermont? A. Investigating a claim within 15 days of notification. B. Offering settlement amounts lower than the claim value without justification. C. Providing a written explanation for claim denial. D. Requesting additional documentation for claim verification. Correct answer. B. Offering settlement amounts lower than the claim value without justification. Explanation. Under Vermont law, offering unreasonably low settlements without valid justification is deemed an unfair claims settlement practice, violating consumer protection standards. Question 66. What is the minimum grace period required by Vermont law for non-payment of premiums on individual health insurance policies? A. 7 days. B. 10 days. C. 15 days. D. 31 days. Correct answer. D. 31 days. Explanation. Vermont law mandates a 31-day grace period for individual health insurance policies, allowing policyholders extra time to pay overdue premiums without losing coverage. Question 67. Which of the following is true regarding Vermont's workers' compensation requirements? A. It is only mandatory for businesses with 50 or more employees. B. Independent contractors must always be covered under workers' compensation. C. Coverage is required for all employees, including part-time workers. D. Workers' compensation covers only on-site injuries. Correct answer. C. Coverage is required for all employees, including part-time workers. Explanation. Vermont law mandates workers' compensation insurance for all employees, regardless of whether they work full-time or part-time, ensuring they are protected against workplace injuries and illnesses. Question 68. In Vermont, which insurance principle emphasizes that an insured cannot profit from a loss? A. Indemnity. B. Subrogation. C. Utmost good faith. D. Insurable interest. Correct answer. A. Indemnity. Explanation. The principle of indemnity ensures that insurance restores the insured to their financial position before the loss without enabling profit. This is a foundational concept in Vermont insurance law. Question 69. What is the primary purpose of Vermont's Guarantee Association? A. To negotiate lower premiums for high-risk policyholders. B. To protect policyholders in case of insurer insolvency. C. To provide coverage for excluded perils. D. To oversee claims processing for admitted insurers. Correct answer. B. To protect policyholders in case of insurer insolvency. Explanation. The Vermont Guarantee Association safeguards policyholders by covering claims and obligations when an admitted insurer becomes insolvent, ensuring continuity of protection. Question 70. Under Vermont law, which type of insurance policy typically includes a coinsurance cost? A. Auto liability insurance. B. Health insurance. C. Commercial property insurance. D. Workers' compensation insurance. Correct answer. C. Commercial property insurance. Explanation. A coinsurance clause in commercial property insurance requires the insured to carry a certain percentage of the property's value as coverage. Failure to meet this requirement can result in reduced claim payouts. Question 71. In a homeowner's insurance policy, which of the following would not typically be covered under coverage B? Other structures. A. Detached garage. B. Fence surrounding the property. C. Swimming pool. D. Property rented to others as a residence. Correct answer. D. Property rented to others as a residence. Explanation. Coverage B provides coverage for structures on the residence premises that are separate from the main dwelling, such as detached garages and fences. However, structures used for rental purposes may be excluded unless a separate endorsement is added. Question 72. Which of the following best describes the coinsurance clause in a commercial property insurance policy? A. It requires the insured to pay a percentage of all losses. B. It mandates a minimum level of coverage relative to the property's value to avoid penalties on partial losses. C. It guarantees full payment on all losses regardless of the policy limits. D. It applies only to personal property coverage. Correct answer. B. It mandates a minimum level of coverage relative to the property's value to avoid penalties on partial losses. Explanation. The coinsurance clause requires the insured to maintain a specified percentage of insurance relative to the property's value, typically 80% or more. If this requirement is not met, the insured may face a penalty on partial losses. Question 73. Workers' compensation insurance generally provides coverage for all of the following except A. Medical expenses due to work-related injuries. B. Lost wages due to work-related disabilities. C. Punitive damages awarded to the employee. D. Rehabilitation costs. Correct answer. C. Punitive damages awarded to the employee. Explanation. Workers' compensation insurance covers medical expenses, lost wages, and rehabilitation for work-related injuries. It does not cover punitive damages, which are intended to punish the employer for negligence. Question 74. Which automobile insurance coverage would typically cover damage to the insured's vehicle from a tree falling on it during a storm? A. Collision coverage. B. Comprehensive coverage. C. Liability coverage. D. Medical payments coverage. Correct answer. B. Comprehensive coverage. Explanation. Comprehensive coverage covers damage to the insured's vehicle from non-collision events such as theft, vandalism, and natural disasters, including falling objects like trees. Question 75. What is the purpose of loss of use coverage in a homeowner's insurance policy? A. To cover personal property damage during a loss. B. To cover additional living expenses if the home becomes uninhabitable due to a covered loss. C. To pay for repairs to the structure of the home. D. To cover liability claims against the homeowner. Correct answer. B. To cover additional living expenses if the home becomes uninhabitable due to a covered loss. Explanation. Loss of use coverage provides reimbursement for additional living expenses incurred by the insured if their home becomes uninhabitable due to a covered peril, such as temporary housing costs. Question 76. Which of the following perils is typically excluded under a standard homeowner's insurance policy? A. Fire. B. Hail. C. Flood. D. Vandalism. Correct answer. C. Flood. Explanation. Flooding is typically excluded from standard homeowners policies and requires separate flood insurance, usually obtained through the National Flood Insurance Program, NFIP, or private insurers. Question 77. In a commercial general liability CGL policy, personal and advertising injury liability typically includes coverage for which of the following: A. Physical damage to property. B. False arrest or detention. C. Employee injuries at the workplace. D. Product damage. Correct answer. B. False arrest or detention. Explanation. Personal and advertising injury liability in a CGL policy covers non-physical injuries to others, such as defamation, false arrest, and wrongful eviction, rather than physical property damage or bodily injury. Question 78. An insurance binder provides which of the following: A. The temporary agreement providing coverage until a permanent policy is issued. B. A summary of all policy exclusions. C. Proof of a claim being filed. D. Evidence of policy cancellation. Correct answer. A. A temporary agreement providing coverage until a permanent policy is issued. Explanation. An insurance binder is a temporary document issued by the insurer to provide immediate coverage until a formal policy can be issued. It includes the main terms of the policy. Question 79. Under a claims-made liability policy, which factor is critical for determining coverage eligibility? A. The date the insured first obtained the policy. B. The policy's expiration date. C. The date the claim is reported and filed. D. The total premiums paid. Correct answer. C. The date the claim is reported and filed. Explanation. In a claims-made liability policy, coverage is provided only if the claim is made during the policy period, regardless of when the incident occurred, making the reporting date crucial. Question 80. Which of the following would typically be covered under business income coverage in a commercial property policy? A. Expenses for inventory replacement. B. Costs associated with temporary relocation. C. Loss of rental income due to a covered peril. D. Fines for business interruption. Correct answer. C. Loss of rental income due to covered peril. Explanation. Business income coverage covers income loss due to a business interruption caused by a covered peril, such as rental income lost if a property is damaged and uninhabitable. Question 81. Under a standard homeowner's insurance policy, which of the following perils is typically not covered? A. Fire. B. Theft. C. Earthquake. D. Windstorm. Correct answer. C. Earthquake. Explanation. Standard homeowners insurance policies generally exclude earthquake damage, which must be covered by a separate endorsement or policy. Fire, theft, and windstorm are commonly included in basic homeowners coverage. Question 82. In a commercial property policy, the coinsurance clause is designed to A. Eliminate the deductible for small claims. B. Encourage the insured to insure their property to a certain percentage of its value. C. Limit the amount an insurer will pay for a liability claim. D. Provide coverage for additional living expenses. Correct answer. B. Encourage the insured to insure their property to a certain percentage of its value. Explanation. The coinsurance clause requires the insured to carry coverage equal to a specified percentage, usually 80%, 90%, or 100% of the property's value. Failure to do so results in a reduced payout on claims, as the insured essentially becomes a coinsurer. Question 83. Which of the following is covered under the liability section of a personal auto policy? A. Damage to the insured's own vehicle from a collision. B. Injuries to passengers in the insured's vehicle due to the insured's negligence. C. Medical expenses for the insured's own injuries. D. Physical damage to the insured's personal property in the car. Correct answer. B. Injuries to passengers in the insured's vehicle due to the insured's negligence. Explanation. The liability section of a personal auto policy covers bodily injury and property damage for which the insured is legally responsible, including injuries to passengers in the insured's vehicle when the insured is at fault. Damage to the insured's own vehicle and personal property is covered under different sections. Question 84. Which of the following statements about umbrella liability insurance is correct? A. It covers only property damage. B. It provides excess liability coverage over primary policies. C. It replaces the need for homeowners and auto insurance. D. It covers medical payments for the insured. Correct answer. B. It provides excess liability coverage over primary policies. Explanation. An umbrella policy provides additional liability coverage that goes beyond the limits of the insured's primary policies, such as homeowners and auto. It acts as extra protection for large liability claims. Question 85. Which type of commercial auto insurance coverage is specifically intended to protect against damages caused by uninsured or underinsured drivers? A. Collision coverage. B. Comprehensive coverage. C. Uninsured underinsured motorist coverage. D. Liability coverage. Correct answer. C. Uninsured underinsured motorist coverage. Explanation. Uninsured underinsured motorist coverage in a commercial auto policy provides protection if the insured's vehicle is hit by a driver who either has no insurance or insufficient insurance to cover the damages. Question 86. The business purchases business interruption insurance. This coverage is designed to A. Compensate for lost income due to physical damage to the business property. B. Cover expenses associated with employee injuries. C. Pay for repairs to business equipment. D. Replace inventory damaged by fire. Correct answer. A. Compensate for lost income due to physical damage to the business property. Explanation. Business interruption insurance provides income replacement if a covered peril causes the business to halt operations temporarily. It is meant to keep the business financially stable until it can resume normal operations. Question 87. Under the personal articles floater PAF, which of the following would typically be covered? A. General household items. B. Scheduled high-value personal items like jewelry and art. C. All items of personal property. D. Business inventory. Correct answer. B. Scheduled high-value personal items like jewelry and art. Explanation. The personal articles floater PAF provides coverage for specific high-value items that may have limited coverage under standard policies such as jewelry, art, and collectibles by insuring them separately. Question 88. Which of the following best describes replacement cost coverage? A. It pays the market value of a damaged item. B. It pays the depreciated value of a damaged item. C. It reimburses the policyholder for the cost to replace an item with a new one similar kind and quality. D. It covers the sentimental value of a damaged item. Correct answer. C. It reimburses the policyholder for the cost to replace an item with a new one similar kind and quality. Explanation. Replacement cost coverage reimburses the policyholder for the current cost of a new item of like kind and quality rather than the depreciated or actual cash value cost. Question 89. Which of the following is excluded from coverage under standard commercial general liability CGL policy? A. Bodily injury cost to customer-owned business premises. B. Damage to client's property caused by the business's negligence. C. Pollution cleanup costs. D. Legal expenses from a lawsuit alleging slander. Correct answer. C. Pollution cleanup costs. Explanation. Standard CGL policies exclude pollution-related claims. Pollution cleanup and environmental liability typically require separate environmental liability or pollution liability coverage. Question 90. Which of the following perils is typically covered under the named perils form in a commercial property policy? A. Nuclear hazard. B. War. C. Fire. D. Earth movement. Correct answer. C. Fire. Explanation. Named perils policies specifically list covered risks, and fire is one of the most commonly included perils. Nuclear hazard, war, and earth movement are generally excluded unless additional endorsements are purchased.